If you and I had a dollar for every time we heard the term global economy, we'd be a lot better off than we are now. Certainly in the case of China, we've been talking about a close alignment with the U.S. and that statement, when China sneezes, the United States catches a cold. Well, I don't know so much if it's China, but I do know in these global markets, investors in this nation are feeling ill at ease, or perhaps indeed ill. For more, we're very pleased to be joined by financial commentator Jim Rogers. Jim's the creator of the Rogers International Commodities Index, co-founder of the Quantum Fund. He is Skyping in from Singapore. And Jim, it is good to have you here tonight on the East Coast on Newsmax Prime.
Good evening, JD. I'm delighted to be here.
And of course, while it's evening on the East Coast, it's early morning in Asia. And we have been taking a look at the world markets. Although amidst the so-called gloom and doom of China, the Chinese market yesterday actually closed up a few points. And as I referenced, trading just getting away underway there now for Wednesday. But as I understand it, Jim, you say China is not the culprit for the latest market woes. If China is not to blame, who is?
Well, the Federal Reserve in Washington, D.C., if you want to get to the main culprit, and the Congress and the President of the United States, who run a staggering debt. But, J.D., facts are, China's stock market was up last year. America's was down. The Chinese economy has been much better than ours. China's partners are having problems. Japan is in recession. Korea is having problems. Many parts of Europe are having problems. If you've got to blame somebody, blame other people. It doesn't matter. We're all going to have problems, but it's certainly not emanating from China. It's emanating from Washington if there's a single source.
Well, we would agree on problems with the Federal Reserve and breakneck spending in our federal government. But I'm interested in something else happening in this global economy, because a lot of people are taking a look at oil markets, and while prices at the pump go down, and a lot of folks driving in the United States say that's a good thing, in terms of market structure and where we're headed internationally, oil prices lowering again, perhaps falling as low as $20 a barrel, would be a bad thing. Why is that?
Well, it depends. If you consume oil, it's a good thing. If you produce oil, it's a bad thing. If you're in Texas or Oklahoma, it may not be or Nigeria or Kazakhstan, it may not be such a good thing. Normally, JD, lower oil prices helps consumers and people who consume. Unfortunately, as I said before, there's staggering debt now all over the world, which keeps getting higher and higher. And so some of the things that should be helping us, we're all burdened by this staggering amount of debt that the world has taken on in the last 2 or 3 decades, especially in the last 8 years.
That staggering debt leads to reeling and rumbling and, I guess, recession. Have we ever really emerged from recession over the past few years, and are we just going to stay in a prolonged recession?
JD, don't you believe the United States government? They say everything is fine.
Not the way they keep score, Jim. That bunch from Chicago counting the votes is messing with unemployment numbers, and I have my own doubts, having been part of that government, I'll tell you that.
Well, you know as well as I do, and every viewer knows, that the American supposed recovery is not there, not the way Washington says it is. And part of the reason is the staggering debt, which keeps going higher, not lower.
And so it sounds, with a minute and a half left, like the prescription is to eliminate the staggering debt. But have we in the United States reached the point of no return, or do we have a chance to turn around this ship of state and right the course?
Well, we'd love to think we do, JD, but it's going to be very, very painful if and when we do it. And one thing that's probably going to happen is the market's going to force us. The market's going to say, we're not going to lend you any more money. We don't want your garbage anymore. And at that point, it's going to be extremely painful. It would be nice to think that we could all sit down and realize we've got to do something now. Nobody likes to take the pain.
And trying to avoid pain, is there any short-term advice, Jim? Just fasten your seatbelt, or what should investors be doing in the 30 seconds we have left?
Watch Newsmax, be knowledgeable, be worried, and be prepared.
Amen. And I like that first bit of the prescription. Watch Newsmax TV. Jim Rogers, way around the world in Singapore, sir. We thank you tonight on the East Coast, tomorrow morning where you are, and we look forward to the chance to visit with you again real soon.
Thank you, JD. Bye-bye.
Take good care. So you heard what Jim had to say. Not exactly coming up roses, but not gloom and doom entirely. Can we get a handle on our debt? Will we? What do you think? We'd love to hear from you. Why don't you send your comments to me at newsmaxtv.com/comments. And there is more ahead. And like Jim said, you keep it here on Newsmax TV for more of Newsmax Prime.